The stock market seems to only be able to go up as of late, and there are a few metrics and indicators that suggest that stocks in general may be overpriced. One of these indicators is something called the Buffett Indicator, a reference to legendary investor Warren Buffett, who first popularized it. The Buffett Indicator takes the value of all companies listed on the stock market of a certain country and divides it by the GDP of that country. In other words, it takes the value that all the companies on a country's stock market are being traded at and divides it by the value of all the goods and services that that country produces. Looking at where the Buffett Indicator stands today, the chart is quite scary. We can see that we're currently at around a 156% ratio, which is near the level it was at before the dot-com bubble burst in the beginning of 2000. Another indicator that is suggesting stocks may be overpriced is something called the PE10 ratio. Now, the PE ratio is when you take the price of a stock and divide it by the earnings that that company has had over the past 12 months. The PE10 ratio is where you take the price of the stock on average over the past month and you divide it by the earnings that that company has had over the past 10 years. Now, this is done in order to moderate the effects of cyclicality in earnings and particular shocks in the market that affected earnings dramatically, such as the pandemic that we just witnessed. So the PE10 ratio is considered a more accurate assessment of where prices stand in relation to the company's earnings. Currently, the PE10 ratio is at the 94th percentile compared to historically where it has been. So on this graph of the PE10 ratio, you can see the orange on the graph represents the level that this ratio was at during the tech bubble of 1999. The green dot on the graph represents the peak right before the Great Depression in 1929. The pink represents the peak before the Great Recession in 2007. And the yellow dot represents where we are today. As scary as these charts appear, timing the market remains a fool's errand. When a correction occurs remains anyone's guess. Could be tomorrow, could be in 3 months, could be in 6 months, could be in 2 years. However, I do think that this is a time to be careful. And I've compiled some tips that will hopefully help you navigate investing in this expensive market. The first tip is don't be greedy. If you think that the valuation of a company has run amok and is now completely disconnected from the fundamentals of that company, time to take some profits. Don't stick with a position hoping that a greater fool is going to come along to buy it at a higher price. When the music stops, you want to make sure that you're already sat down. There's a saying on Wall Street: bulls make money, bears make money, and pigs get slaughtered. Make sure you're not the latter. Remember, tawasaw bil haqq. Hold on to the truth. And if the truth of a company cannot justify the price, time to take some profits. Number 2, don't invest money you can't afford to lose. Make sure you have your cash reserve situation sorted out. All of your upcoming expenses in the near term should be covered by a cash position and not investments in the market. Financial experts will typically advise that you keep 3 to 6 months of expenses in cash, and I think that's not a bad rule of thumb. Number 3, diversify. Invest in more than one asset class. Don't have all your money tied up in just stocks. Ideally, the asset classes that you invest in should have very low correlation between them, so that if a drop happens, not all your investments drop together. Good asset classes to diversify into include stocks, gold, real estate, and if you earn more than $200,000 annually, I encourage you to check out fundmebff.com and apply to become an investor. We offer access to an asset class that has exhibited zero correlation with the stock market since our inception in 2017. Link to more information is in the description below. Now, cryptocurrency is another asset class, but I'm not sure at this point there is enough data that will give us confidence it will exhibit low correlation with the stock market in case a drop happens. The following chart shows the correlation between the S&P and Bitcoin over time, and you see when the market is not in crisis, the correlation hovers around 0, so the two assets are uncorrelated. But during the most recent pandemic, in March, the correlation between Bitcoin and the stock market reached a max of 0.57, which is considered a moderate to strong correlation. Considering correlation of 1 means that the two assets are perfectly correlated. So I don't think that there is enough history as of today to say that Bitcoin and cryptocurrency in general provides a safe hedge when the stuff hits the fan. And my fourth tip is to educate yourself. The biggest return you're going to get for knowing what you're doing is in case of a downturn. When the economy is good and everyone is thriving, basically everyone is going to make money. However, when things start to go south, you find out whether the companies in your portfolio were true winners or they were just riding a rising tide. As Warren Buffett once said, only when the tide goes out do you figure out who's been swimming without shorts. Not as a biha image, but you get the point. Accordingly, the biggest return you're going to get for researching your companies, exercising discretion in your investment decisions, being strategic in those decisions, is going to be in case of a downturn. So if you have the interest and would like to learn more about investing in stocks and researching different investments, now is the time to do it. And I hope, inshallah, that this channel will help you do exactly that. So in summary, my tips are: 1, don't be greedy, tawasaw bil haqq. Don't invest money you can't afford to lose. Diversify and educate yourself. Those were my tips on investing in an overvalued market. I hope they end up making you some money or at least saving you some money. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.